Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, we are fast approaching the Christmas holiday weekend, and of course, some of our Argentina fans would have gotten indeed a very early Christmas gift. But today we're going to take a look at the banking sector very quickly, taking a look at the two local boys, Republic Financial Holdings Limited, as well as First Citizens Group Financial Holdings, and what their financial performance would have been for their fiscal years ended September 2030. Both groups would have reported increased earnings, but for differing reasons. Let's take a look and get right into it, turning quickly to Republic Financial Holdings, or RFHL, and the group would have reported an earnings per share figure of $9.33, which is a 16.3% increase from the $8.02 reported in the prior comparable period. Net interest income up 4.2% from 3.97 to 4.13 billion. Overall operating income up that 5.2% from 5.8 to 6.1 billion, translating into net profits attributable to equity holders of 1.525 billion compared to that 1.3 billion in the prior comparable period. Now, when we take a look at RFHL's operating income by segment, green lights across the board, with a 7.3% increase in other income in that green segment from $1.8 to $1.96 billion period over comparable period, and a 4.2% increase in in net interest income from 3.97 billion to 4.1 billion, as previously stated, year on year. Now, when we take a look at RFHL's profit before tax by geographical segment, no major surprises here. Trinidad and Tobago continues to be the largest contributor to PBT by geographical segment, with 1.09 billion out of a total 2.33 billion in profit before tax, or roughly about 53%. And there were increases, encouragingly, across all other geographical segments, with that one exception being Ghana, where they slipped from 152.2 million to 138.8 million, roughly a 9 to 10% decline overall in terms of contribution. But nonetheless, again, very good reading for Republic Financial Holdings Limited investors. And of course, that would be good news for those unit holders of CIF who are going to, in very near future, in early 2023, receive units of RFHL. Now, at a price of 135.69, RFHL is trading at a price-to-earnings ratio of 14.5 times, which is just slightly above, so broadly in line with the sector average for the banking sector of 13.6 times, and offers investors a reasonably attractive dividend yield of 3.3%, again in line with that banking sector average of 3.2%. So on that basis of geographical diversification, fair valuations, and concerning or keeping an eye on interest rate uncertainty going forward, but again, looking at that operating income growth, Bourse is going to maintain a market weight rating on RFHL for the time being. Turning quickly to FCGFH, or First, the group would have reported an earnings per share figure of $2.91 per share, a 10% increase from the 264 reported in the prior comparable period. Now, total net revenues, unlike the RFHL group, for First, were actually fairly flat, down just about 0.1% from 2.14 to 2.13 billion. There was a very positive impact from credit impairment write-backs, which swung from a loss of 0.4 million to a profit of 17 million, and a lower tax rate overall, where the taxation expenses declined from 235 million to 189, translating into net profit after tax from 667 to 783 million. And when we take a look at FCGFH's profit before tax by segment, pretty good reading across the board, with the exception of corporate banking, which traditionally has been its largest segment, which fell just about 8% or so, from 657 million to 581, but nonetheless, generally improving PBT by segment. Now, when we take a look at the overall banking sector, we can see that First rather is trading at that 18.1 times multiple with a 3.2% dividend yield. That dividend yield is smack in line with the sector average, compared to RFHL, which is at pretty much 3.3%, but perhaps a little bit cheaper on our earnings dollar price paid per dollar of earnings generated basis of 14.5 times, but pretty much reasonable good value for money. So at a price of $50.05, First is trading at that 18.1 times price earnings multiple, above the sector average, as mentioned, of 13.6 times, and pretty much smack in line with the banking sector dividend yield of 3.2%. So with increased operating profits in mind, on the back of that credit impairment reversal and lower taxation, and somewhat elevated valuations, when thinking of the price to earnings ratio, Bourse is going to maintain a market weight rating on FCGFH for the time being. Well, that's it for this week's edition. For more information, you can give us a call at 2Bourse, email us at invest@boursefinancial.com, and check out our website, bourseinvestment.com, where you can catch all of our research absolutely free, and of course in today's business section of the Trinidad and Tobago Guardian newspaper. Well, we'll see you next time. Have yourselves a truly wonderful Christmas holiday, and however you choose to spend it, of course, enjoy and be safe. And we'll see you next time on the Bourse Report. Merry Christmas, everyone.